Oh, hello guys. Welcome to another session with Guru himself. Today we're going to do something different since previously I posted about the payslip explaining how I want to differentiate the deductions in the payslip and the deductions in the taxations. Okay. So I'm going to start the taxation bit different today because I once had a lesson about taxation, but I'm going to do it again with a different method. Okay, but it won't be that different method. Things are still going to be more like the same. Okay, so but before we go into taxation, there are some things that I would like to note them down, and I think it's good that whoever is going to be watching this video will benefit from them. Okay, before we start, I want you to click on the subscribe button. If you did not subscribe to this channel, I want you to hit the thumbs up, and I want you to comment and tell me which video would you like me to make, which topic would you like me to do next. Okay. Right. What I'm going to do here, I'm just going to show how things roll up in the taxation. Okay. For the topic for today is taxation. Okay. The topic for today is taxation. Okay. So under taxation, we're only going to deal with the income tax. Okay. So with the income tax now, we want to know how the SARS calculate the income tax that each employee must pay, okay, per month or per annum. Okay, so that is the income tax we see on the pay slip. All right, so sometimes we call it a payee. Okay, we call this income tax a pay as you earn. Okay, every employee who's working must contribute to this. Okay, right. Before we calculate this, I just want to do some steps of which I believe they are going to be more helpful on how to arrive on the final answer of the income tax. The first thing that you need to worry about, or you must determine or calculate or identify first, it is what we call a basic income. A basic income, or someone can say a basic salary. Okay, so remember the basic income, this is just the income, an ordinary income that the employee gets. Okay, so and this basic income is not our gross. I will only explain later how this can be a gross. Okay, so this basic income, it sometimes goes with extra incomes. The extra incomes that we can talk about here, we can talk about the bonus. That is the extra income that an employee can get. Okay, let's say for instance, we're talking about someone who is an educator, we're talking about someone who is a nurse, someone who is a police. They do get the 13th check. Okay, so that 13th check is their extra income. Okay, so these two incomes, if you add them together, you're going to have what we call a gross income. They're going to give us a gross income. Okay, so remember, your employer pays you a gross income. Okay, so from the gross income, the government, or we can say SARS, is not going to tax everything in this amount. Okay, I repeat, the government is not going to tax everything that your employer have paid you. Okay, so the SARS will then look at few items. Those few items, we call them the non-taxable income. Okay, these incomes are not supposed to be paid, and remember, those incomes, they are part of this gross income. Okay, so if you are clearly contributing to them, then SARS is not going to tax those part of the amounts. Okay, so let me show you which amount am I talking about. First, I'm talking about a donation. Remember, if you are donating, you are clearly giving to the poor of the poorest. Let's say you take every month 1,000 and you're giving it to the charity. Okay, you are helping people. Therefore, the SARS will just say, okay, this 1,000 that you are giving people, remember it is from the gross. Okay, so that 1,000, we are not going to tax it. That means when they calculate the tax, they need to take that 1,000 aside. It must no longer be part of the gross that they are going to tax. Okay, I just hope I make sense. So they just put that amount aside. Good, this amount is not going to be taxed. All right. So next in the line is pension fund. Is pension fund. When we talk about the pension fund, remember we're talking about the fund that can be accessed when an employer has reached 60 years and above, and the person now has retired. Okay, now you are retired, you're no longer working. What are you going to depend on? You're going to depend on your pension fund. And how did you gain this pension fund? Is because you have contributed to the pension fund while you were still working. Okay, so the pension fund is always, I'm not sure if it can change or what, but it's 7.5% of the gross. Okay, so when you are still working, this portion of the pension fund, it is not taxed. Okay, but remember, we know SARS. Okay, the time someone is going to, I'm just going to into the reality, what is happening with the pension fund. Okay, so in reality, this amount of pension fund, yes, it's not going to be taxed now, as in today when someone is getting paid. Okay, it's not going to be taxed, but in the future, when you have retired or you are on pension now, remember, you're going to get all your monies. That is where SARS is going to tax you. Okay, but as of now, they are not taxing it. They are just taking that money and saving it for you. Okay, right. Another one in the line here, we can talk about the UIF, which is the 1% of the gross as well. Okay, remember the UIF is different from the pension fund. Okay, UIF, it is only when you are unemployed but still willing to work. Okay, so remember, it can actually, it can be contributed by people that are working on the contracts. Okay, so that if your contract is not renewed or your contract comes to an end and you are still willing to work, but now remember, it means your contract is finished. That means now you become unemployed. Okay, so now they're saying, okay, now you're unemployed, so you can claim this money back and survive with this money while you're still looking for work. Okay, right. So in my table now, I'm having these three items that we call them the non-taxable income. Okay, so these are the only items that are not supposed to be taxed, meaning that we have to subtract them from the gross income. Okay, so if we remove them, if we take the gross, let me do this. If we take the gross income, and we subtract the non-taxable income. The non-taxable income, we know our non-taxable income, we have those three. But remember, it's not mandatory, that it's not compulsory that everyone has to donate. It's not mandatory that it's not compulsory that everyone contributes to pension fund. We will go with the information that is given. If someone, they say they contribute to pension fund, that is the information that we are going to follow. Okay, if someone contributes to the UIF, that is the information that we're going to follow. Okay, right. Now, since we took our gross income and subtracted our non-taxable income, it means now we will remain with what we call a taxable income. This is what we will remain with. That means, just listen to the word on its own, taxable. It means that this income, it is the one that SARS is going to tax now. Okay, that means they're no longer going to tax the whole gross income. Okay, from the gross income you have subtracted your non-taxable income. Good, let's move forward. Right, moving forward now, this taxable income that you have now, how do we then calculate the income tax with it? Okay, so we are going to use the taxable income to identify the tax bracket. Then if you understand it from here up until here, getting the taxable income from the basic income, it means now you will be able to calculate the income tax. Okay, so those things are the ones that I wanted to clarify first. Okay, now remember, if you don't have the extra income, it means your basic income becomes your gross income. Okay, and then if you don't have non-taxable income, that means your gross income will then become your taxable income. It will become your taxable income. I'm just going to extend it. It's going to become your taxable income. Okay, right, let's move to the actual question right now. All right, we have this. I hope it's going to be clear to everyone. We have this. We have the Mayas, who is 64-year-old and earned an annual taxable income. So already in this case, the taxable income is being calculated or determined for us. Okay, so the taxable income is 551,762 rand for the 2019 and 2020 tax year. During the 2019-2020 tax year, Marius was not a member of any medical aid fund. Okay, then the table below shows the tax table for the 2019 and 2020 tax year. Okay, right, so this is how we're going to remember. If we go back and check here, I said we use what? The taxable income to identify the tax bracket. Okay, so if we move down to the table again, on our far left we can see our tax bracket. Okay, bracket 1 up until bracket number 7. Okay, so in block number 2 we see the range of our taxable income. So bracket number 1, it ranges from 1 rand to 195,000 850. Okay, so now we can see that our taxable income, it is not between 1 rand and 195. That means this tax bracket is out. Okay, so we cannot say this is the tax bracket whereby they're going to charge Marias. Okay, good. Now I was just explaining the taxable income. We will answer the actual questions. Okay, now here we look at the rate of tax. Okay, so the rate of tax, this is the formula. For me, and then for my learners to understand this, I call the whole thing here. If you clearly look at this, I don't know. Okay, if you look at everything here, I call this thing, all of these rates, I call them that whatever bracket that you're going to determine, just know that the rate of tax is a formula. Okay, is the formula that we are going to use to calculate the income tax. Okay, so when you look at this, what is important is for us to be able to substitute clearly. Okay, so if you check, I'm just gonna use this the second one here with 35,000. This says 35,253 plus 26% of, we know that the of in the bottommost means multiplication. Okay, but since here we're gonna have two amounts, that means this of, we now change it into brackets. Okay, meaning that instead of this of to put the multiplication, we now open our bracket and close our bracket here. Okay, because we're gonna have two amounts. Okay, the first amount is going to be the taxable income. Which taxable income are we talking about here? We are talking about the amount which you have used to identify the tax bracket. Okay, and then how are we going to substitute this weight above? Remember, if we substitute, meaning that we want to do away with the weights and remain with numbers only. Okay, it means that this weight above, we are now going to substitute it with a minus. I want to give you a hint. If you see yourself, your taxable income being less than this amount, that means you have chosen the wrong bracket. The taxable income must always be above this number. It must always be above this number. If it is less than this, change high. Just change the bracket and look at another bracket. Okay, it means you have chosen the wrong bracket. Okay, good. Now I've explained the rates of tax. Now the rebates, let's look at the rebates now. Just explain this table so that when we go to the questions now, we understand clearly what we are going to do. Okay, so the rebates, they are actually what we call the tax relief, meaning that they make your income tax to go down. Okay, instead of you paying the high amount, but the tax rebate, they will make your amount to go down. Okay, same as the medical aid fund, but remember, these ones are not the deductions. They are not non-taxable income. We are just saying they are going to make your income tax to go down. That means we only deduct them after we have calculated the annual income tax. These two, this we call them the tax relief, the tax rebate and the medical aid credit. Okay, now I want to talk about this one first. Under the tax rebate, this tax rebate of primary here, everyone who is working qualifies for primary. Okay, if I am 20-year-old, I am going to qualify for primary rebate. Okay, but once I reach 66 years, it means I'm going to qualify for primary and secondary. Okay, meaning that when they're going to reduce my annual tax, they are going to reduce it with 14,220 and 7,792. But here comes the older me. Ne? Okay? I am 76, I'm 76 year old. Alright? It means that now I qualify for primary, I qualify for secondary, I qualify for tertiary. Meaning that when they are now going to reduce my annual income tax, they are going to reduce it with 14,000 and 7,000 plus 2,000. Okay, so the medical aid is going to depend how many members you are going to join with. Okay, if you're going to pay for your wife, if you are a gentleman, you're going to join your wife and your 2 kids, it will depend. Okay, so that means you are going to pay for yourself, and then the first dependent, that means it's going to be maybe the wife, and then each member that comes after is going to be an additional member. Okay, meaning that you're going to pay 209 for them. Okay, so now I would like us to move into the real questions. I don't want to waste time in the questions. Okay, the first question: identify which tax bracket. Remember, okay, identify which tax bracket Marius falls in based on his taxable income. Okay, so we understand that for us to use the tax table and then to identify the tax bracket, we need the taxable income. Okay, and according to the information given, we are already presented with the taxable income. So the taxable income here is 551,762. Okay, now we go into our brackets. We're going to check where this amount falls in. Is it between 195? No, then we scratch it. We go to the next bracket. Is it between 195 and 305? No, we scratch it. Is it between 305 and 423? No, we scratch it. Okay, we go to bracket number 4. Is it between 423 and 555? If we check this number is more than this one, it means it is somewhere between these two numbers. That means our the tax bracket that they are going to use is bracket number 4. So when you write this, you can say bracket 4, and that will be your 2 marks just to identify the tax bracket. Okay, move forward. Now number 2, they say calculate the amount of tax Marius okay, let me start. Calculate the amount of tax Marius must pay for 2019-2020 tax year. That means now, remember, we want the amount of tax that he's going to pay for the whole year. That means we must calculate the annual income tax. Okay? Right. So we have identified the bracket. Let me go down. Okay, I'm gonna go to this page. We have identified the bracket, so we're going to start it like this. Is bracket number 4. Okay, so we have seen that he falls in bracket number 4. Now what are we going to do? We are now going to check the rate of tax for bracket number 4. This one. Okay, what does it say? It says 100,263. We are going to rewrite it the way it is. 100,263 plus, is it 30? Oh, okay, let me see. Let me just go back. 36%. Okay, plus 36% of taxable income above 423. Let me check the last three numbers. 423,300. 300. So you see now, I have just written down everything the way it is. Okay, so I am going to follow the rules of BODMAS here. Okay, so I think you will just also do it the way I'm doing it. You follow it step by step. Don't ever punch everything in your calculator, because these calculators, they are programmed differently. So sometimes you can punch it and then you get the correct answer, but someone will use a different calculator and get the wrong answer because the programming of the calculators are not the same. Okay, so if I believe that if you're doing it step by step, you are actually allowing yourself to get the answer 100% correct. Okay, so no shortcut. So it's going to be 100,263 plus. Now, when it comes to the percentage, because I want to make things easier when you go to your calculator, this is what I'm going to do. Okay, so what is it that I'm going to do? I'm only going to say I'm going to change this percentage into a decimal form. Okay, so if we change 36% to be in a decimal form, so it's going to be 0.36. Then remember the off. About the off, I said we are going to change the off into the multiplication. But then here, the problem is we are having two amounts after the off. Okay, meaning that we have to open the bracket. We have to change the multiplication into the bracket so that we can deal with the two amounts that comes after the multiplication. Okay, so this taxable income, we are going to substitute it with 551,000. How much was it? 551,762. 752. Kion, 752. Okay, I will check it. 762. Okay, then the weight above we subtract. What do we subtract? 432, 300. Okay, and then we close off the bracket. Okay, now we're going to work step by step. We're not going to miss any step here, so we just follow the rules of BODMAS. Simple as that. Okay, good. So we're still going to continue. 100,263 plus this one is not yet affected, so it's 0.36 into which bracket. Now we are now going to subtract these two amount. Okay, so 51762 minus 423, 300. So according to my calculator here, I'm getting 128,462. Okay, so moving forward now, we're still going to have 100,263 plus. Now, because we are left with one amount after this percentage, we can then now take this percentage and multiply by this. So the reason why I am doing this is because I've got bad experience with my teaching. So especially when it comes to my maths lit learner, one learner will just say 1% divided by 100. So that is why I have changed this percentage into a decimal. Okay, so I don't want you to make mistakes like this. Remember, if you take your calculator and press 1 and then you put the percentage sign and then you divide by 100, you're going to get a miracle. Okay, so that is going to be okay, 0.36 multiplied by 128,462. 128,462, and then I get 46 100,246,32. Now, do we still need to rewrite the 100,000? No, we can now add these two amounts because this has been simplified or calculated. Okay, so we can say 100,263 plus 46,246,32, which then give us 146,509,32. And what is this amount? This is our annual income tax before rebates. Okay, let's go up there and then check if we have answered our question. Okay, we haven't answered, we are not done answering our question, okay, because we did not subtract our rebates there. And remember, they say Maras does not belong to any medical aid. Okay, it's not a member of the medical aid fund. Okay, so if we check Maras here, she is 64-year-old. Okay, so which rebate is she qualifying for? Okay, she is qualifying for primary. Then when you look at secondary, the secondary start from 65 going up, but Maris is only 64. That means that she belongs only to the primary rebates. Okay, and the primary rebates is 14,220, meaning that from this amount of the income tax that we have calculated, we are now going to say, we will therefore say 146,509,34 minus 14,220, and let's see how much she will pay per annum for the whole year. That means for the whole year she's going to pay 132,289,32. That's what she's going to pay for the whole year. Okay, and you'll get your 5 marks for this. Remember, your 5 marks will start here. This is 1 mark. I don't want to lie to you guys. This is 1 mark just for you to rewrite the rate of tax, and the correct one according to the bracket, okay, is 1 mark. Then you're going to get another mark for substitution. Then the other marks will come. But this, the first 2 steps are very critical. That is why they award the marks, because we can see that you are able to substitute, you were able to choose the correct tax bracket. Okay, right. Let's move to the next question. They are saying, Mara stated that if he had been 1 year older, he would have saved more than 600 monthly on taxes paid during 2019-2020 tax year. Okay, verify showing all calculation whether his statement is correct. There is nothing that have changed, but the only thing that have changed is that she is now 1 year older. Now remember, if she is 1 year older, she was how much? She was 46-year-old. Okay, that means now we're going to add 1 year. That means now she is 65. And if she is 65, it is now going to change the tax rebate. She's no longer going to qualify for primary only. She will now qualify for primary and secondary. Okay, let's go to it, because now she will be, the age is going to be here. And remember, everyone qualifies for this. Okay, that means now she qualifies for primary and secondary. Okay, that's what have changed only. Okay, still she does not belong to any medical aid fund. Okay, so are we going to change the whole calculation? Remember, the taxable income is not changing. That means the bracket still stays the same. So where are we going to change? Now we are going to change here. When we're going to answer our question, we are going to change from the annual income tax. Okay, let me choose that. We are going to change from the annual income tax because that is where the rebate started to come in. Okay, let's check now. The annual income tax that we got, it was this was 5.3. Is it 5.3? Yeah, 5.1.3. I just want to write it down. Okay, okay, 5.1.3. Okay, so it is we're going to change from here 140,000 509.32. Okay, now we are no longer going to subtract 14,220 only, but then what are we going to subtract? We are going to say 14,220 plus. We now go to the next rebate, so secondary rebate. Okay, the secondary rebate here is how much? Is 7,794. Okay, 7,794. Okay, we close the bracket, and this is going to be 140 509.32 minus, let's add those two and see how much we get. 14,220 plus 7,794, and that is equals to 22,014 rand. So how much is the annual? Now that means we are calculating her annual tax after the rebates. Okay, so we're going to say 140 509.32 minus 22,014. Okay, so I get here 118,495. Okay, comma 32. But then this, it is not our final answer. Okay, this is the annual tax she's going to pay only if she is 65-year-old. Look at this. If she is only 64, she's going to pay an annual income tax of this. But if if she is 65, she's going to pay an annual tax of this. But then this is not our answer. I repeat, this is not our answer. And you have seen the marks, it says 6 marks. Okay, so let's go back. I want us to check something, because that is not our answer. Then we read the question again. They say, Mara stated that if he had been 1 year older, he would have saved more than 600 monthly. Okay, let us see the monthly income tax for both ages. Okay, so now let's start with we're going to start with the monthly income tax for 64. So that means we're going to say 140 509.32 divide by, because this is the annual income tax. Okay, so we divide here by 12. So we're going to get the monthly income tax. All right. So it's 140. Okay. What am I doing? It's not 140. It's 132. It's not 140. I'm sorry for that. That is before the rebates. This one, we're not talking about this one. We're not talking about this one. Sorry for that. So the monthly, the annual income tax is once it was 132, 281, 289, 289,32, 289,32. Then we're dividing this by 12. And how much do we get? 132, 289,32 divided by 12. So monthly, if she was 64, she was going to pay 11,224,11. Okay, then let's go for the monthly. You must note this down. I'll show you. Let's note this. This is the monthly income tax when she is 64. Let's go to the monthly income tax when she is 65. Monthly income tax for what? For 65. Okay, for 65. So we have calculated the 118,495,32. Okay, so remember this 118,495,32, it is the annual income tax. Therefore let's divide it by 12 to get the monthly. Okay, we divide it by 12, therefore we get 9,874,61. okay, now it means that if she was 65, she was going to pay 9,874,61 cent. Now look at when she was 64. Now we are going to check the difference. Okay, so the difference, now we're going to say how much was that one? 11,024, 11,024,11 cent. Then we subtract 9,874,61 cent. Okay, and then we check how much is the difference. If the difference is more than 600, it means her statement is correct. 11,024,11 cent minus 9,874,61 cent, which is equals to 1,149,50. This is how much she should be saving, only if the difference was 1 year. Therefore the statement is valid. We can say if it was she, I'm not sure if it was she is, the statement is valid. Okay, and that is your conclusion, and then you get your full 6 marks. Okay, then we go to the last question. Okay, I don't know if we're gonna do it here. Okay, we're gonna do it here. Let me remove this. They say Marius is considering joining a medical. Oh, it was he. Okay, it's fine. He plans to include his wife and 2 grandchildren. Determine the total monthly medical credit he would qualify for if he joined the medical fund. Okay, remember, it is him. I'm going to write this: him and the wife and 2 grandchildren. Okay, how much is he going to pay for himself, and how much is he going to pay for for the wife, and how much is he going to pay. Let's look at the table. And remember, this table, it specifies that this is the medical credit per month. The main member is him, so he's going to pay 310 for himself, 310 for himself. And then for the first dependent is 310, that is going to be the wife, so it's going to be 310. And then additional members, he is going now to contribute 209. That means, remember, the 209, it is for one member. And then how many grandchildren are coming? They are 2. Therefore, we're going to multiply this by 2. Okay? That means if we multiply that by 2, it's going to be 209 multiplied by 2, which is 418. Then therefore the total that he is going to contribute per month is 310 plus 310 plus 418, which is equals to 1038. And that's how much he is going to contribute toward the medical aid fund. Okay, and this brings us to the end of our today's lesson. Okay, if you have liked the video, if you would also like to join my extra classes, whereby, remember, here I'm just giving people the list of my knowledge. Okay, but I do private mentorship whereby I'm teaching my learners. And when I teach my learners, let me explain here, because people don't understand. Some people, they are going away, they are afraid of what I'm doing. Okay, so what I do is that I have 3 sessions per week. Okay, those sessions, both each session is 2 hours. And then on weekends, I give test. Okay, that exclude the homeworks that I give during the week. Okay, so if you are under my mentorship, just know that I give out homeworks, and then on every Saturday I give you an online test. Okay, I have a way, my own way of using technology, of creating an online test. You write your test, you get your marks, you correct yourself. You don't just get marks, you get marks with correct answers. And those correct answers, they come with explanations that it's gonna explain to you how you were supposed to answer that question. Okay, so I'm the guru himself. Whatever I do, I make sure that my learners pass with good result. They don't just pass, they pass with good result. I thank you for watching this video for this far. If you have liked the video, make sure that you click the thumb up, and then you also don't forget to subscribe, and then don't forget to share this video to your friends and family members that will need this video, even if it's not for today, even if it's not for tomorrow, but for the future. Make sure that you share it with them. Thank you.